Hello everyone, I'm Kunal Sodani from Global Trading Center, Shinhan Bank India, and we are here once again to decode and understand the global macro picture as well as the domestic factors. So talking about the flows as we always do, let's talk about the July flows for the domestic side. And we have seen inflows of around 40,000 crores for equities, while around 15,000 crores of inflows in debt. So a very healthy inflow, we must say. On the other side, if we also talk about the FX reserves, we are having a healthy FX reserves of $666 billion now, which are at all-time highs, having an import cover of almost 12 months, which is again a healthy sign. Uh, we talk about budget, which was yesterday, and the budget has some things related to the long-term and short-term capital gains. And the fiscal deficit number was around 4.9% that was announced. So I think market is pretty, was aware of it, and I think it's about the digesting phase as of now. But dollar rupee did react yesterday, and we did see dollar rupee approaching 83.72 levels as well. But coming back to first the macro picture, Brent crude prices did cool off, where the demand from China remains a concern, and there is some easing of the geopolitical factors, which has also contributed to the Brent crude prices going lower. So that acts somewhere in favor for rupee, maybe not immediately, but in a long-term manner. But on the contrary, Chinese yuan is still seen weakening. It's around 7.2 at 7.29 levels, which is lowest in since November, and now I think the high is around 7.35 levels. So somewhere this weakening of Chinese yuan has been putting some pressure on rupee. Also, if we talk about how rupee has fared in the range, I think there has been a tectonic shift in the range from earlier 83.30 to 83.50, now later moving to 82, 84, 83.40 to 83.60 odd levels, and now again a shift to 83.50 and 83.7075 odd levels. So this shift of range by 10 paisa has been seen. In fact, even the forward premiums for dollar rupee has risen. So if you see in the month of June, it was around 1.59%, and from there we have grown to 1.77%. So obviously, there remains some strong demand which has been seen, which is pushing the dollar rupee pair higher as well. But what we expect and what we anticipate first to understand is the FOMC policy, which is due in this month, in the month end, where we don't anticipate any rate cut. But September is one of the ones where the market is anticipating one rate cut to start with. Also, if we talk about the RBI policy in the month of August, we're not eyeing any kind of rate cut there. I think a lot of things may remain important to watch out how the monsoon pans out, and thus the CPI number from here on. So no rate cut from RBI as well. Bank of Canada, we are expecting a rate cut. With respect to the time where Eurozone and GBP, that is the UK, will also see one rate cut in the coming policies to come. So overall dollar index, if we talk about, it is now in a very narrow range of 104 to 104.80. While they're eyeing two important data points, one is the US GDP numbers, which is expected to be around 1.9% year on year, while they are also anticipating the US core PCE number, or the PCE number, which is anticipated to be around 2.6% on a year-on-year basis. So these two important numbers will be due to which dollar index possibly trading at a narrow range. But overall band, if we talk about 103.80 to 105.20 is the broader range where dollar rupee or dollar index has been trading. For dollar rupee, we anticipate that the NDF highs and now the onshore highs remain the same as 83.72, 72 half levels. If we are able to breach those levels, stop losses may be triggered and we may test 83.90 also. While on the other hand, now the base remains 83 half. So that's all from my side, friends. Wishing you a very good week ahead. Thank you.